What is going on, beautiful people? It's Joe, aka the Nomad Investor, where dividends freedom anywhere is the goal. And today we are back with another portfolio update. As you guys can see on the YouTube channel, we have made some changes, which is pretty cool. I made a more simplistic banner that I think fits the vibe of me personally, as well as the brand as a whole. And I changed my PFP. It's the same photo, but I just edited it using my creative ChatGPT skills. But anyways, this is the current state of affairs. We are at 854 subscribers and 26 videos. I'm currently filming the 27th video, and this is the 24th portfolio update. For those of you who are new here, if you could smash that subscribe button, that would mean so much to me, and it will help keep me motivated to continue making updates like these, videos like these. And if you are not new here, make sure to smash that like button. That would mean so much, help with the algorithm, and go a long way. So let's dive into things. As always, the videos on this channel are for informational, entertainment, and educational purposes only. I am not a financial professional or advisor, and nothing here should be taken as financial, investment, or tax advice. Investing always carries risk, and those seeking financial advice should seek out a registered professional. Now, with all that being said, let's hop right here into the game plan and goal for growing my small portfolio from $0 to $1,000 per month in dividend income. I have two sources of income. One is remote work income, very stable, very consistent, and the other is business income, which does fluctuate up and down depending on the seasonality of things. I've committed to contributing at least $300 a month, all the way up to $1,000 plus, depending on how things go, into my Robinhood taxable brokerage. And I'm treating this brokerage like a business, meaning that I'm trying to aim for a certain profit margin. And my profit margin is 30% plus high yield. And the way that I'm doing this is through investing into high yield income ETFs, such as things like WPay, HOOW, QDTE, XDTE, XPay, BLOX, and more. I'm committing to investing into a maximum of 5 positions, and I'm alternating between anchors and satellite ETFs. This is part of the core satellite investing strategy. And I'm going to be reinvesting my weekly dividends or monthly dividends, depending on the fund I'm in, either through drip or stacking the dividends to purchase when the market is down. Now, me personally, I've recently switched my strategy. I'm only going to be stacking the dividends, which means I'm going to be saving the dividends, stacking them up, and using them to purchase shares when they reach below my average cost per share of the positions that I'm in. And drip plus always compounding is the portfolio growth strategy. So I'm basically going to be rinse and repeating this until my account hits $1,000 per month in dividend income. And again, none of this is financial advice. This is for entertainment purposes only. Hopping here real quick into the dividend income milestones while I grow my small portfolio. This is basically so I can document or celebrate the small wins leading up to the bigger goal along the way. Last month, we were so grateful and thankful for reaching the first 2 goals. And this month, we are aiming for the $300 a month goal first, and then the $400 a month goal if we can. But you guys can pause this video if you want to see all the goals, all the milestones leading up to the big goal at the end. Now, I wanted to talk about my new strategy. This is something that I've discussed in previous videos, but if you are new here, basically, I'm looking to diversify a bit and hold some different positions that are more focused on growth. The way that I'm going to be investing moving forward is according to these allocations. So 50% will be in my high conviction, high yield ETFs, or as I like to call it, the HCHY ETFs. These, I believe, aren't going anywhere, and this will allow me to continue increasing my share sizes for each of these positions. The remaining 50% will be divided amongst 3 types of funds. The first being the 20% allocation into growth ETFs. I'm personally going to be investing into VGT. The next 20% allocation will be into stable NAV index ETFs. I haven't determined which one yet, but I'm looking at QQQI, XPay, and EGI at the moment. And the last 10% allocation will be into SGOV, most likely, or at least something equivalent. And this is strictly for cash reserves. This allows me to use margin without cash funds being used up first because it's sitting in SGOV. This also gives me flexibility with paying off my margin should my margin buffer reach a high risk percentage. This would be the moment that I would liquidate my SGOV and pay off my margin. That is why I'm doing this strategy, in particular, this allocation approach. So moving into Robinhood, we have $5,129.06. That's our net account value. This is currently the pre-market so far. As you can see, my buying power is $2,574.27. I am at a margin buffer of $2,811.20, or 54.35%. My total margin that I could use is $5,204.28. and my used margin is $2,630.01. So everything is looking pretty much the same for the most part. Hopping into each of my positions. First things first, WPay is $54.37 a share. We are currently at a market value of $3,863.50 pre-market. The total return that I have for this as of right now is $85.32 or 2.26%. Our average cost is $53.17 a share. I have 71 shares, and the portfolio diversity is 49.79% with a maintenance ratio of 30%. Moving on to HOOW, we are at $75 a share. Our market value is $2,325.42. We have a total return of $210.03 or 9.93%. Our average cost is $68.23 a share. We're at 31 shares, and we have a portfolio diversity of 29.97% with a margin ratio of 30%. Next, we have NVDW, which is at $50.65 a share. Our market value is $1,570.15. We are up $161.86 or 11.49%. Our average cost per share is $45.43. We have 31 shares, and our portfolio diversity is 20.24% with a 30% maintenance ratio as well. So overall, we're looking pretty good on all our positions in terms of being in the green. However, of course, we shall see how the market performs today. According to some news that was shared with me in one of the communities that I'm a part of, it looks like the futures were opening green, which is positive. So I think we may have a potential green day, but of course, I'm not guaranteeing it. And again, none of this is financial advice. And I really quickly wanted to hop into the dividend sheet. Sneak peek, actually, I'm working on my own little dividend margin calculator and dividend sheet in general, but for now, I'm going to keep using this one. So these are the numbers that I like to pay attention to. It's the total return and market return. This is from the last data that was pulled from the market close on Friday. So I think it's pretty much the same as the last update, but I could be wrong. And the total return for HOOW is 16.70%, 4.92% for WPay, and 14.09% for NVDW for total return. And then our percentage for market return is 11.32% for HOW, 1.22% for WPay, and 12.12% for NVDW. Now, it's a new month. It's November now. So we're going to see how much we get paid this week and the upcoming weeks to see if we can smash our new goal. Now, I wanted to hop on X. And if you guys aren't following me on X already, make sure to follow me on X. I'm posting here a little bit more frequently, more regularly. And yeah, you guys can also get a lot more updates that I can't always post onto YouTube because obviously I got to film a video, I got to edit. But here's my X channel. You can follow me at I'm Nomad Investor. Again, that's I'm Nomad Investor. And yeah, let's hop into some articles. So here's a post by High Yield Hustle. It says, why I'm anchored in BLOX. For those of you who don't know, BLOX is a position that I'm really heavily wanting to invest into. I know it's associated with Jay, who's part of Tidal Financial Management Group or Tidal Financial Group, whatever they're called, which is also tied to a lot of other funds like I think Defiance, obviously Yield Max, and a few others. But I am really interested in this because David Nicholas seems to be managing this so far pretty well, and he's kind of on top of things and working directly with the Tidal Management Group. The thing about Tidal Management that you guys have to realize, they're a platform for launching these ETFs. So a lot of these hedge funds that are launching these high yield income ETF funds, they're actually launching their ETFs on Tidal's platform, okay? And they're getting support and everything from Tidal as a result. Anyways, it's something to be mindful of, but it says, why I'm anchored in BLOX. We've finally seen many funds garner a lot of hype just to collapse. I'm here to say BLOX doesn't have nearly enough hype and is built to sustain. Not all funds are built the same. So let's break down what makes BLOX different. Strategy is everything, and BLOX is incredibly unique in how it operates. On one end of the holdings is BTC and ETH. The other side is equities. In a space meant to grow long-term, I want upside with my holdings, not heavy upside cap. BLOX solves that problem. They are longing the underlying and selling put credit spreads for income. What this means is your longs are not capped and you still get to harvest that premium. One of the main differences you'll see in its prospectus as opposed to other funds is that appreciation is the main objective, income is secondary. What this has led to is price change alone beating the S&P 500 massively. That difference gets much higher when you factor in total return. And then it says holdings. As you can see, the crypto allocation is there along with companies in the space. You also see blue chip companies in there with TSM and Nvidia. ROC, the return on capital numbers are structural, not destructive. BLOX actually harvests around 50% yield and only pays out 36%. They are making far more in income than what is actually paid out. This is a major green flag. This is yet another reason you don't see that typical erosion on the chart. The other thing is management flexibility. If you traded spreads for a long time, as I have, you know that in down markets, put credit spreads are not where you want to be. They have the ability to flip to the call credit spread side, which is critical if we shift to bearish market conditions. They also have employed protective puts at market tops to perfection. This is why even though the fund is in a very volatile holdings, you don't see massive drawdowns. Long term, what about a bear market? The question I hear time and time again. There will always be bear markets. My question to you is, what happens to Bitcoin during every single one? You realize it was just a buying opportunity. Sure, BLOX can draw down to $15, but unlike other funds, it has the ability to capture all that upside in the inevitable bull market after. This fund and its strategy is built to last. We'll see about that. I think there is a large misconception in the space that every fund is running the same strategy and set for the same path. The best thing you can do is gain an understanding of how the options chain actually works so you can identify winners. This is very true, guys. Do your own research to figure out if something works for you. As for me, I found myself a winner here. This is what I'm trying to convey with BLOX. As you guys have seen in my previous videos, I don't like the involvement of Tidal. I don't like the involvement of Jay. It's no shade to them. It's just after watching how they manage the YieldMax funds, I haven't been very impressed. But so far, it seems like they've got some good synergy going with Nicholas Wealth Group or X Funds. So yeah, I'm hoping that this is going to continue to perform well. As you guys know, I haven't started my position yet in BLOX, but it is something that I'm eyeing and looking to purchase and add to my portfolio. Moving on, the next post is by ETF Delta. It's talking about ULTI, ULTI with an I, and KYLD. It says underlying basket comparison. Beyond different option strategies, holdings also vary. ULTI with an I and KYLD each have 20% overlap with ULTI with a Y. ULTI with an I and ULTI, UPST, IREN, RKLB, SMR. KYLD and ULTI, HOOD, COIN, HIMS, BMNR. So I thought this was interesting because you can see a breakdown of all the underlying holdings for each of these funds. So you guys can pause this real quick and take a look at what the holdings are and the weighting and everything like that. But let's move on to the next part. So it says, across sectors, the ETF displays varying levels of concentration. Crypto is the top common sector and theme in all three funds. ULTI is heavy in AI, ULTI with an I in energy, and KYLD in chips and semis. So semiconductor chips, all right? Average 30-day per basket, ULTI 1.0, ULTI with an I 1.1, and KYLD 0.65. Holdings are likely subject to change as these funds ramp up. These are the allocations and breakdowns depending on the sector. So these are very highly competitive, and you can see which one is going to ultimately perform the best. Obviously, I have no faith and confidence in ULTI just because even if they do reverse split, I don't think it's going to recover so much. But these two funds, I'm very interested to see how they perform and play out. Energy, the energy play for ULTI with an I is very interesting. And then KYLD, I'm actually very, very interested in this. I don't know if I will invest in it, but I'm very interested to see how it performs because of the chips and semiconductors thing. I think the hardware aspect is just so crucial in this tech space that we're in. Next, I just wanted to share this. This is super interesting. This was from November 1st, 2025, around 8 a.m. from High Yield Hustle. This is the total return percentage from January 1st to October 31st. Now, of course, not all funds started around that time. So these are, as of October 31st, the total return percentage. So first is HOOY from YieldMax. I'm very impressed, but of course, since the underlying is HOOD, I'm really not surprised. It's up 110.14% in total return. HOOW 103 and 37%. PLTY, again from YieldMax. So as you guys can see here, HOOY is up 110% this year. HOOW from Round Hill is up 103.37%. PLTY is up 100% as well. AMDY is up 78.89%. I wish they would have thrown in AMDW, but I guess it's not that long out. Chippy is up 62% and BLOX is up 48.86%. These are all pretty good funds. Of course, I'm not really big on YieldMax, so I would probably not like any of these funds from YieldMax except Chippy. But yeah, I wouldn't invest in these, but the ones that I'm interested in that are on here is BLOX and HOW, which I personally own HOW. Now, hopping into this X post by Johan Dizon or Johan Dizon, not sure how it's pronounced, but it says, while constantly evolving, this is the breakdown of my portfolio investment strategy. 3-sleeve portfolio. The first sleeve is cash, the second sleeve is income, and the third sleeve is growth. The whole premise of this portfolio is that it should sustain my monthly income goals, all the while preserving and growing the NAV of the portfolio. I like this strategy personally after reading it because it's very similar to my mindset and methodology. Of course, there are differences, but let's dive a little bit deeper. Key objectives: to provide a sleep well at night or SWAN portfolio to live off and grow wealth over time. Preserve capital and to only use returns generated from investments. Portfolios should maintain a high degree of diversification through diversified managers and sectors, and support a steady amount of reinvestment, allowing income streams to grow with portfolio. Portfolios should be resilient during turbulent bear markets or one-off issues, I think such as like the tariff or just any kind of news that would cause a dip of any kind. Portfolio breakdown. The portfolio is comprised of 3 virtual sleeves. Sleeves 1 and 2 are individual taxable accounts. With sleeve, I believe they meant to say 3, is split between Roth IRAs and 401ks and individual bridge accounts used to bridge for early retirement. Sleeve 1, cash. Objectives. This is the sleeve that provides immediate cash needs for expenses, emergencies, or dry powder for investment opportunities. This sleeve holds up to 1 year worth of high liquidity income at all times in the forms of cash, / money market, SPACs, week, tip, BND, CDs, etc. 10% of distributions generated from income sleeve number 2 is automatically transferred into this account every month. It's actually a really solid idea. I have not even thought about doing this myself, but I like the way this guy's thinking. Sleeve number 2, income, 60% weighting. This sleeve holds only income producing assets used to fuel and replenish sleeves 1, 2, and 3. This sleeve should generate an average 5 times of 1 year expenses as needed for sleeve 1. Sustainable yield for steady recurrent income. Capital preservation and growth over the long term. This is what I'm talking about. Core, index or sector-based ETFs. Some diversification through sectors, strategies, or fund management. So for crypto, they're holding BLOX. Beautiful fund. QQQI for the NASDAQ 100. QDVO for concentrated NASDAQ. TSPY for S&P 500. MAGI for MAG 7. And GX for broad-based and international. For the satellite holdings, high conviction individuals, these funds represent a small weighting of 5 to 10% total of the income sleeve. So these are things like TSLW, which is Tesla leveraged, and WPay, ultra high yield. So that's interesting. I guess because of the exposure to this like leveraged funds and ultra high yield, he's classifying his WPay and satellite ETF. But WPay, that's interesting. Okay, I can see where he's going with this. And I'm not saying he's wrong at all for doing this. I completely agree. Sleeve number 3, growth, 40% weighting. Wow, that's a pretty heavy weighting, but I understand where he's coming from with this. Objectives: used to grow portfolio NAV through high quality ETFs and individual companies with high growth potential. This sleeve ideally is held for 5 to 10 plus years, but can be trimmed annually or periodically if the allocation weight is positive and overweight. Goals: potential 3 to 5x hypergrowth returns from a 5 to 10 year holding period. Core ETFs primarily index-based. QQQM, SPMO, SMHX, BTGD, and IBIT. You can see the breakdowns of what these funds are focused on. For the satellites, AVGO, TSLA, BMNR, Hood, Google, and Amazon. And again, you can see the breakdowns of which sectors they are covering. For reinvestment and replenishing strategy, portfolio sleeve 1 is funded in the following order. 10% monthly distributions from income sleeve 2 are transferred. Withdrawals from sleeve 3 equity assets in order for the prior year's performance. Overweighting in equity asset classes from the prior year end, sleeve 3, and overweighting in fixed income from the prior year end, sleeve 2. Cash withdrawals from remaining fixed income assets, sleeve 2. No withdrawals are taken from any equity following a year with a negative return if cash or fixed income assets are sufficient to fund the required withdrawal. That's a lot. I know it's pretty in-depth. I'm not going to fully explain this strategy, but I wanted to share this because it's a similar approach when I talk about the core satellite investing approach, investing strategy all the time. So as you can see, he's doing this for 3 different accounts, or 3 different sleeves, as he calls them, of his accounts. And then I love how he breaks this down into cash, income, and growth. More recently, I talked about combining them all into one portfolio, so that way I don't have them separated. And I think that's what's going to help me the most. Anyways, I really know that's a lot. I know it's really in depth, but I hope you guys enjoyed this. It's very educational. I would highly recommend going over it yourself. You can check it out on Johan Dizon's X. So check it out there. Now, last but definitely not least, before we conclude with this video, I wanted to share this. So I'm curious what the performance has been over the course of the month. So for the past month, we can see it was up 2.07% for BLOX. I think that was pretty good. If you bought in October 22nd, you probably got in at a really good rate. However, at this current time, you can see this ETF is rallying. This thing is running up and to the right. And year to date, of course, it's up and to the right. Of course, we did have that more recent downturn, and we're seeing that there's a higher low that's being set in place. It still isn't bouncing off of the previous higher low, but we shall see what happens. But yeah, I'm very interested in this fund. I think if I can get in anything below $26, I would be happy. But I'm still waiting a little bit, guys. I really want to pay down my margin a bit more. There's a lot of uncertainty this week with earnings calls also happening for Robinhood, for instance, and some other tech companies. So just be mindful of that and be vigilant as always. But yeah, that's how BLOX is performing so far. Last, let's take a look at ULTY with an I from Rex Shares. As you can see, it's up 1.78% in the after hours as of Friday, October 31st. And the chart is looking pretty good so far. Fund is very, very good, I think. But yeah, I mean, this is something that I'm still paying close attention to. I'm not necessarily going to invest into it at this time. I'm going to see how this performs. And again, most importantly, it's at a 100% maintenance ratio. So at this present moment, it's not very interesting for me to purchase or invest into this fund. Anyways, guys, I hope you enjoyed today's portfolio update. If you are new here and you haven't already, make sure to smash that subscribe button. But if you watched the video to the end as well, make sure to smash that like button. It really does help with the algorithm and things. Last, before we quickly go, if you have any comments, questions, suggestions, or feedback, or you have any topics that you want me to discuss on this channel, make sure to comment them down below. I do read almost every single comment that comes onto the channel as of right now. It's still manageable. And also, I try to respond to almost every single one of you when I am able to. But yeah, if you guys do that, that would mean so much to me. And until next time, guys, peace.